Good morning, everybody. It's Friday, January 27th, and the economic data is out. We've got core PCE coming in at 0.3%, in line with consensus. We've got personal income month over month at 0.2%, also in line with consensus. And we've got personal spending month over month at negative 0.2%, which is just slightly lower than consensus, which was negative 0.1%. Pre-market is looking slightly greener than it was 2 seconds ago, but it's still red. So we'll see if today's title is a lie or not. Do stocks really only go up? I guess we'll have to find out. Welcome, everybody. Let's kick it off. What's going on?
On WallStreetBets.
I am super excited today. I really hope this background color that you've picked, Opinion, is inversed. I hope it's opposite Friday day. It is Friday. It's a lovely Friday. It's the last Friday of January, so that's sad. It's the 27th. But hey, I'm looking forward to it. Hopefully it's a green day. I'm shooting for green. If you're shooting for red, that's your choice. But I think Opinion maybe was colorblind today or supporting something. I don't know which one it is yet. But either way, you did good.
Thank you for the kind words of encouragement. But pre-market is ticking up as we speak, so we'll see where it lands by market open. Any predictions from anyone
If
else?
you're talking about Tardstrology, Opinion, you've come to the right place. My star stream was all fucked up today. It was all sorts of fucked up today. It split into two bearish trajectories, one going off on a parallel trajectory, and then immediate downsies for the bearish signal. And then the other star stream was going a little downsies, a little bearish, and then parallel for the rest of the day. So adjust your puts accordingly, according to the star stream. But the exciting news about Tardstrology was I caught an actual shooting star in today's Tardstrology. So if you want to check that out, go to Bloomberg, r/Bloomberg on Reddit. Check it out.
I have some exciting news this morning. Did you guys realize that you can sell stocks? I just kind of hold them forever, but apparently you can sell them. It's pretty wild stuff. I just mostly play options, but it's interesting to know.
Yeah, I'm looking at the opportunity of selling stocks, but I don't know how to because everything's supposed to go up and up and up and up and up, and so yeah, I just don't see the reason to.
My longest hold was transferred to me from an account that I opened when I was a minor, and it's BTR is the ticker, and I bought it in 1999, and it's still chugging along. It was my average share price is $3.64, currently sitting at $50 a share. But hey, that's not in the spirit of WallStreetBets. Let me give you guys a retarded play. Blue Apron. This is a stock that pumped and then it dumped, and now people are trying to pump it again. There's not a whole lot of evidence that it's going to be successful, but I bought some calls anyway, maybe more than some, just in case it pumps. I don't want to miss out on it. And I also went into this NVOS based solely on the fact that it had 49 million in volume yesterday, and it normally has 1 million in volume. So I literally just bought it because everybody else is buying it. It was dirt cheap. It was 14 cents a share. I figure, hey, can't go that bad. Even if I buy 1,000 shares, it's only $100. We'll see what happens. I know nothing about the company or why it had such high volume. And those are my plays.
I don't know if you guys heard, but the Dow is cutting back on some jobs. I thought that was interesting. I thought the New York Stock Exchange would cut on some jobs, considering what happened last week. I should say this week.
They're firing the guy they demoted to intern. He was a full employee, demoted him to intern before the press release. They fired him. That makes sense.
Hey, they're going to save about $1 billion, and it's only 2,000 jobs, so not that bad, right?
Why does it take so many people to run the stock exchange? Can't like a robot do that? Come on.
Who's doing layoffs?
I do stand corrected. That was Dow Chemical. That goes to show if you just read a headline quickly, you will come with an assumption. That's why you should click the link and read more.
Unknown Irish. What do you got for us, buddy? You got any plays today? If not, I know Hipsticks has a play, or at least had a play yesterday. Welcome back, Hipsticks. Glad to have you here again.
Hey, what's up, guys? I'm driving. I'm looking at Natty today. I'm thinking contract a bit closed. I think it's like forward looking by 2 months, right? But it's just Natty's just been taking a hit. I'm thinking about buying some maybe some monthly calls on it on Boyle.
So when you said Natty, like the beer? Is that what you said? What?
No, Natty gas, natural gas.
I gotcha. So you playing Boyle, or what are you playing on that?
Yeah, I'm thinking about some Boyle calls.
Is there?
All right. So it looks like we have a little interception there. What were you saying, Hipsticks?
Yeah, I'm thinking about some Boyle calls. Can you guys hear me all right?
Yeah, we can hear you right. Scald came out a little bit. Go ahead.
Oh, okay. Yeah, I'm looking at Boyle calls. It's just been taking a beat down. Even though weather has been forecasted to be relatively cold, I'm thinking demand's gonna come back.
Nice.
Holy shit! Why is Boyle down so much?
Anybody seeing the wild swings in Tesla in pre-market?
Are they good or are they bad, Hendricks? Oh, sorry, Scald. Go ahead.
I was just going to say, I saw the post yesterday in after hours. It had a bunch of weird movement. People were posting to WallStreetBets about it. There was one block sell at $90 a share, and then there was another one at like $160, and it was all over the place. There was another one at $250 that went through, which was like, didn't make any damn sense. So what's going on with Tesla pre-market? I'm driving. I don't.
I'm just seeing it swing from up $3 to down $1.50, back up $3. Like it's just going crazy.
I like playing Tesla pre-market and post-market in the margin. If you are able to play with the margin and play with house money, it's pretty easy to make a little change on that one.
If it was easy, everyone would do it. And if you look at the number of derivatives on Tesla, everybody does do it. So it must be. I agree with you on that one.
Yeah, it works. If you have enough cash in your account and you're on the margin, you can buy nice size blocks and just set your stop loss and set your entry sell and do what they do.
Yeah, so it looks like WISA had a stock split 100 for one. So that's interesting. It was like a 14-cent stock. Now it's worth $12. But obviously it had a stock split. So if you only hold one share, it's not going to be worth that.
Yeah, I posted 3 splits to watch. I was going to wait to talk to a little bit later, but I did post that last night. It's 2 other ones that split this morning. I posted it in the group. I can tell you which ones they were. Personally, I don't like to play splits inside of them before they split, but the day after, they tend to have a little bit of a run. The two other companies are, give me a second, boys. You have REED, it did a 50-1. You have MRKR, it did a 10-1. And then the Rice WISA. We played that earlier this week. I will plug, since I'm on here now, I posted some options plays that I got into yesterday, and I woke up and they're in the green. I'll be damned. Looks like I'm 6 for 6 so far. But anyway, we got a call option on ET. It expires on the 17th. It's a 1350 call strike, and the cost was a quarter. We also have gold, GOLD, 217 expiration. Strike is 2050. I posted getting at 0.35. I got in at like 34. And then the other calls I made the other day are all in the green. I cashed out. So let's see what these do. Thanks, fellas.
Is it too late to talk about BBBY?
Never too late.
Yeah, go for it.
So I do have a play after opinion. It was when you posted your article yesterday regarding the bankruptcy for BBBY, I immediately checked the options chain, and I wanted to do my first stock option because I mostly do index. But I'm thinking a straddle on the June 2025 options at the strike price of $5. And it's telling me the break evens is 0 on the downside, and if the upside is 1032. So if the stock goes above 1032, well, you would start losing money on that. But the buying power is only $26 to get into the trade. The max profit is 532. And due to that recent article, I don't see BBY going above $10. I think it has a higher likelihood of them just going bankrupt at this point. So that's my play for today. I don't know how many contracts I'm gonna do, but probably just a small amount. But yeah, if anybody's interested, on 2025 June, the downside is there really isn't a downside because the premium covers all of the downside. The upside to break even is 1032 for the stock if it goes above that. I'm not gonna say it's free money because every time it's free money, it's really not. I'm just saying it's a very likelihood that somebody can profit off of it, so I might take that trade.
When it starts printing money, take your cash, baby boy.
Hey, my PP reverse. I just want to say, your play, we can't get mad at you till 2025, so you got some time.
That's true.
I like to
I don't
answer
think
because people laugh.
I don't think PBBY is gonna have any time to reverse course and go up from there. I think it's just downhill for BBY at this point. I mean, probably they'll get like another short squeeze in that, but the buying power is so low that it's not really gonna shake me out or anything. I mean, it's gonna go down eventually. It is. Sorry for any bulls out there, but if you do have a bull case, we'd love to hear it.
I just want to remind everybody that Wall Street Bets has a Discord. If you haven't joined yet, please join today. We have a casino where you can gamble free coins. We had a stimulus dropped by none other than ZJZ, and that was a beautiful stimulus, but you missed it. So you can join next today, right now. And usually Opinion has a pinned comment, which I'm sure he will work on right now, and with a link to that Discord, and you can join today.
That was very good.
All right, I'll I'll work on it right now.
The Discord also has events on occasions.
One more time, Waffles. Can you say that? Sorry, I cut over you.
I said, what's very nice about the Discord is occasionally there are events that the Discord hosts. It's pretty cool.
Yeah, one of the original purposes of the Discord was to get more people notified actually about the talks. So it's hopefully kind of working. Let me know if you came from the Discord. That being said, does anyone have any thoughts on Bed Bath & Beyond? If not, Fred from the YouTube comment section asks, are we buying more GameStop?
I think we're done with GameStop. in this
No wrong answers. No wrong answers.
Today is the 2-year anniversary, and one would say that today is MOAS. But not Tardstrology.
I don't-
Tardstrology dictates otherwise.
But really, GameStop is not a buy or a sell. It's a way of life.
Well, I want to hear from Astrology. Do you have any other plays? What's up? What are the stars saying?
The stars are saying to buy puts and adjust your trades accordingly.
Is that the cup and handle pattern from last night near Mars and Saturn?
It was the star stream that Orion shot out of his arrow using his feet and his asshole.
Oh, okay.
Wow.
I think he's talking about the northwest version of the Milky Way. I think that's where you're gonna find Orion shooting from his asshole.
I try to study astrology, but I've never heard the stars described in such a manner.
You mean eloquence?
Yeah. They can be
Sure.
very, very elusive sometimes, so you have to use the proper wording sometimes.
Agree.
I guess that's why we have you, because we can't decipher what the stars say.
You need word soup to decipher the stars.
I'll give an update on Hardy's play. I don't know if you guys recall, but he briefly mentioned buying some Porsche NFTs at 0.9 and selling half on a double. Well, even with the messed up mint date and all the surprises that came along with minting that collection, a lot of people were saying it was going to crash. And here it is. It's doubled in price. It's above 2.1 is the floor. So big congrats to Hardy. I think he made at least 10 grand off that trade, or realized so far.
He realized? Oh, that's wow. That's a good play.
He typically realizes half on a double. That's his rule of thumb. So he would have realized, I guess, around 5 grand.
How? Like he just opens up OpenSeas and connects his NFT via there and just sells half?
That is roughly how NFTs work. Yeah, you just list it, sell it, GG.
Got him.
So congrats. We also recently added some clarification to the crypto rules. At least in the subreddit, it's now we're sticking with just whatever future products CME offers, the Chicago Mercantile Exchange. So that's really just Bitcoin and Ether. But at least for here, we'll leave it somewhat looser. But please no shit coins like yesterday.
Oh, I want to update on my my position yesterday, even though the market rallied. Because I was short calls. Hold on. I was actually up green. I was proud of myself. What was it? The 505 call. No, definitely. No, I'm down 10%. I'm good. Never mind.
So anyway, I am a couple months ago I talked about being bullish on Robinhood. That bullishness is still in the back of my head. I do want to say this coming earnings, I'm actually going to be buying calls. I'm basically hoping I have positions in Robinhood as well, and I'm hoping to get out of Robinhood at about 14. I'm going to be buying calls for the earnings based on the fact that a lot of people after the FTX collapse went to Robinhood because they knew that Robinhood had more secure crypto at the time. So that brought in more customers. I'm hoping that will increase revenue, also increase their balance sheet. Thank you guys.
Interesting indeed. Looks like we have Imperator 285 wants to come up. Got his hand raised.
Hey, opinion. Somebody in the chat said if we can do a poll regarding BBY.
Sure. What's the question?
Is there any way we can do a poll for the game and towel stock? I would love to know how many people are done with those and how many people want to discuss further.
Sure. In the comments, everyone. Right. Just type out done, DONE, if you are done with GameStop or Bed Bath and Beyond. And if you're not done, write. What should they write?
I ain't fucking leaving.
Right, I
Opinion,
ain't fucking
why-
leaving.
Wait, why would we be looping in GameStop with Bed Bath and Beyond? I feel like
Yeah, we could just do Bed Bath.
unfair. So
We
like
could
I'm
just do
not a
Bed Bath.
GameStop bull, but that feels unfair to loop any company in with one that's actually been like, hey, we can't service our debts, we're like going under.
Fair enough. We wouldn't want to make it look like any of these companies are like Party City.
I thought we were shills. That's not what shills do.
All right. The comments are overwhelmingly done, never started, and corn. Thank you for whoever said corn. So let's bring them something new. What else is out there?
Did anybody have a chance to look through American Express earnings? Not at my PC, but it looks like they had a beat. I saw an article a few days ago that said they were going to beat, and they did that.
Nice info, titty fucker.
You really can't go wrong with American Express. It's cash up
Well,
front.
I'll tell you what, the searching American Express right now, the CEO says we aren't seeing recessionary signals. So either I'm gonna take the opposite approach that American Express is not gonna be good for them. I mean, if it's not good for Visa, it's not gonna be good for American Express, right?
I don't think American Express customers and Visa customers are the same demographic, personally, as somebody who accepts credit card payments on a regular basis.
I was
When
gonna
you
say,
say
I think American
customers-
Express are more higher earners, I would say.
Absolutely, their demographic is much less affected by inflation than Visa or Mastercard.
I will speak to that though. I just went from my platinum card to a plum card on American Express because I don't travel as much as I used to, and they charge $700 a year for your annual fee, where the plum card gives you 60 days to pay your whatever you swipe with no interest. So as a business owner, I went from the platinum to the plum to save that cash money. So that could affect them in the big picture, but I don't know how much. Like you said, it's a different tax bracket.
I have an ad. If you guys have 30 seconds, the
One.
the ticker is NNDM. So Nano Delta Monterey, NNDM. And let's see what we have here. What they do is they manufacture a printer that other manufacturers would purchase in order to make flexible circuit boards. Long uphill battle for them to publicize their product, and also for them to see returns, because remember, they just make the printer, and they have patents on how to go about making flexible circuit boards. This goes into like circuit boards for like your shoes, circuit boards for your clothes, circuit boards that might go into a slinky. There's a lot of different applications. Anyways, they have had their fourth quarter for 2022 was the highest profit that they have posted, which is not a lot. $12 million after years of development, years of business. And now we have this letter to the shareholders, a response to hostile intentions to dismantle the company. that came out on January the 25th. So apparently the company, as of 2 days ago, was worth more than what it was trading at. So there's something to keep on the radar. My personal opinion is there's companies like these that really don't want to consolidate. In other words, they don't want to join with other companies, but there's the way that circuit boards and the way that technology works is that the market demands dictate the direction. Just because you can make a flexible circuit board, that they have a lot of crazy applications that they are pursuing and have achieved, but the market is what dictates how well something like this does. And there are a lot of so it's a 3D printer for flexible circuit boards. It's a very expensive 3D printer because it uses their proprietary process. It's just something to keep on the lookout for. It's a rising star, and here we already have. They're just now. The more money they make, already people are zeroing in on them.
Sir, this is longer than 30 seconds, but I was curious. What's the ticker one more time?
Yeah. Okay, let's see. Nebraska, Delta, Mama.
Mango. Mango.
Yeah, there you go. Thank you. Mango.
Okay, and how much did you get paid for this? Just curious, because you did say it was an ad. So,
did we get paid to talk about this? Nothing.
Oh, no. I apologize. You did say it was an ad, so I just wanted to clarify.
Addition.
My bad.
No. There's a lot of these. There's a lot of these companies. Desktop Metal is one of them. Nano Dimensions, which is the one we're talking about here. That's the name of the company, is Nano Dimensions Limited. So there's a lot of them. I think that
if I could ask a question, kind of a counterpoint. Intel posted earnings yesterday. Their guidance was dismal. What are your thoughts on this company that kind of operates in a similar space, producing circuit boards, and how they'll be doing in the next, let's say, year?
I think both Intel and Nano Dimension are conservative buys. Keep in mind that Intel is going to be essentially has the treasure chest of the United States government flung open because it's in our national security interest to have fabs, fabrication inside the United States. A lot of high-tech fabs, and in other words, take that business away from Taiwan. So that's very important for us. That's like our military objective number one. It's not an economic objective, so let's not really get confused about that. It's a military objective to have chip fabrication in the United States. It's a big deal. So if you look at the money that is actually either in terms of tax breaks, or incentives, Intel is billions of dollars coming Intel's way, billions. Also Taiwan Semiconductor, also Texas Instruments. They're all going to be creating fabs as early as we're talking 9 months down the road we have this already. That's how big of it's probably our biggest priority at the moment as far as the government. What is the government doing? What are they worried about? This is what they're worried about.
What's your timeline for this? Just curious. Do you think in the next 6 months, the next year?
There's actually a schedule for when all these incentives kick in for these companies, and it's already started. And the reason I bring it up is you mentioned Intel. Intel is a big benefactor of this, as well as the other ones I mentioned, which aren't American companies.
Nice. So something to keep an eye on for sure.
Yeah. Well, yes. Yeah, absolutely. So we have fabs and we have flexible circuit boards now. We can just create both of them here. So a moderately
Hey,
bullish.
hey, Georgia, if I could just chime in real quick to help you out a little bit.
Please.
NNDM is trading at like only half of its book value, which I don't know if that's weird or whatever for a tech company, but I was invested in them for a while and I'm pretty bullish on them long term. But I just think it has more room to go down, so I'm not back holding anymore. But it's definitely good, and I don't know why it's trading at so much less than book value.
Their quarter four earnings, they actually missed, or not missed, excuse me, their net income went down about 267%. I think that they're still in the R&D phase. They obviously have industrial 3D printing and have different printers available, but the real question is will their competition outweigh them? Let's not forget that the Netherlands is still, I would argue, still the big granddaddy of them all. But I digress.
Guys, based on the chat, we might need to change topics a little bit.
And Georgia, thanks for coming in. We do appreciate your insight. But if you could talk a little bit faster on your points, just because it's time is ticking. It's a Friday.
Yeah.
Just one
we do
quick
appreciate
point on Nano Dimensions as well. They are heavily involved in the defense space, and they are cash heavy. So it's kind of a safe way to invest your money with a lot of upside in the future. Just another thing to look into if you want to look at their balance sheet.
Opinion. Just want to bring this to your attention. Just kind of want to get your permission first before I bring this out here. The Pfizer Veritas video, it's a little political, so I really don't want to bring it up per se, but it is something that might affect Pfizer stock. Can you just bring some rules to the house before we even try to discuss this?
Yeah, absolutely. Thanks for asking. Look, we don't really care if it's political as long as it relates back and relates quickly back to a stock or trading or investing. So, with that in mind, go for it.
Get them.
I don't think it's any. To be honest, I don't think it's any relevancy. I mean, it's not going to affect its earnings. It's not going to affect, the operations of the company. It's not going to affect that. I want to talk more about Adani.
All right, let's go for it. Oh yeah, Donnie.
Yeah,
Yes.
let's go.
So after the article came out, looks like so far he's lost $50 billion in market value after the short seller report. No, obviously I don't expect a lot of people to have any plays because his company trades on the Indian stock exchange, right? But regarding how much influence, from what I'm reading, that his company has over with both officials, politicians, and also fraud, I'm not sure if that affects the India government by a lot or by a small amount. I mean, just look what happened to Evergrande with China, right? It hasn't really affected much of China so far with Evergrande's downfall. Same thing with this guy, with the Adani company. I think they're just going to get bailed out, to be honest. I think his biggest downfall is that he just wrapped up a lot of leverage in his own stock. The stock is dropping. That's going to be his biggest downfall. I don't think it's going to be regarding any laws that he broke, which he looks like he did. I think it's just I think that's going to impact him, the leverage.
Do we have any information whether it is affecting any U.S. stocks by any proxy, by chance?
I don't. Maybe somebody else that knows if they have exposure to the U.S. No.
Can you
It's a
repeat the
big story.
question? I was zoning out. I'm not playing Adani.
I don't think a lot of people can, even if we wanted to. I think
Hey, you're really far from the mic. We couldn't hear you.
Yeah, I'm not sure what's going on there.
Hey, has anyone tried BuzzFeed or anything yet? It had a pretty good run yesterday. Debating on selling now or waiting to see what it does after the
I
market.
think it's because of this meta news. Did you see that?
Yeah, I saw something on it earlier.
they're both doing shitty and running out of content. So I think they're using AI to generate content for Facebook and BuzzFeed.
Wonder how much further they'll go up now. I got a little bit of profit on them, but I hopped in kind of late yesterday.
Gee, son, you're coming in a little quiet there. If you could just come into the mic a little closer, please.
I was trying to figure out what kind of play to make on them. I hopped in a little bit late yesterday, but I didn't know if I wanted to sell now or kind of wait till the market opens. Looks like it's up a little bit, but no.
Yeah, I don't know. I don't know how this affects their model. It's interesting with BuzzFeed more, I think, because they do this sort of like anyone can write an article for BuzzFeed, I think, and you get paid, I don't know, a few $100 or something. So theoretically, if you just outsource this all to AI, you could continuously crank out articles, and it would learn which ones are more engaging and pump that way. So I mean, it could be interesting. I just don't know enough about the details to know if I want to play it.
It's nothing new. Like, this has been going on for ages. It's just,
Yeah.
This is them trying to stay relevant, like, publicly.
Yeah, with all this AI news, like,
Yeah,
throwing
this shit's
out
been
some-
happening for probably decades.
It's interesting because I went to a talk on AI last night, and all of this stuff that we're like getting excited about now, everyone has been using for like years, like you said. So
yeah, that doesn't mean there's an added value because ChatGPT is popular. Hell yeah, ride that train. But like legit underlying tech, it's the same.
I mean, keep in mind though that what we're getting out of it is not the most current thing that they have available. It's just the most current thing that's been released.
Yeah, I just noticed they had a good run yesterday, and I hopped in, but I didn't know what to expect.
Hey, sorry, we really can't hear you. But let's bring it back to plays. Like, what are some investable theses here?
Here, could I update the IPR play that I've had? There's some new information.
Yeah, let's do that and then go to the person who said yes.
Okay, real quick. So IIPR is the ticker. I've been playing puts on it since June. Recently, they put a press release finally documenting some of the problems they're having with their tenants paying rent, but the problems are significantly worse. There's 3 downside catalysts coming up in the very near term. I'll go through them very fast. The rent collections issue, it's underreported substantially, and it will continue to be worse. The dividend will have to be reduced shortly. Also, there's
what's the ticker?
IIPR. This is a cannabis REIT, and I wrote quite a bit about it if you want to look. So another issue that's come up is there's an ETF called MSOS, which tracks the cannabis industry, and it's had significant redemptions with forced selling, and IIPR is being sold from there, along with downgrades from all analysts. And lastly, it appears they have 76 million in cash today, but they have contracts and letters of intents to commit 150 million over the short term. Simultaneously to all this information, they put out a release that they've authorized up to 500 million of shares to be sold. So defaults will increase, sell-off from an ETF will continue, dividend will be reduced. The March $17.75 puts is, I think, a very good play. You can expect this stock to continue to crater. That is it.
Can we get that ticker one more time?
Yeah, ticker please.
IIPR, Innovative Industrial Property. Innovative
This
Industrial
is the
Properties.
this is the company that purchased. They purchased my favorite, which was Black Knight Petroleum, which made tar for like the railroads and for asphalt. So surprising that they go down. It's a small business, but it was a good business that they bought.
I think this is a cannabis real estate trust. So maybe similar name, but
think more
unlikely
DJ.
to be that.
Yeah, and just real quick in the comment section, we do have someone talking about WBD 60% jump from its downfall. So that's pretty impressive. That's Warner Brothers Discovery. So if you guys want to talk about that, and also any thoughts people want to know about the CPI info, just giving you guys some quick topics to talk about. And then also someone mentioned that Adani actually has exposure to coal and natural gas stocks in America. So we should look into that. Maybe we can get some DD on that. Yeah, I digress. Thank you.
So a completely different note. Looks like Bitcoin mining capitulation for the miners has actually occurred, I believe. So mid to long term degen play, MSTR, MARA, Coin, HUT, HUT, Riot, and Bitfarm, BITF. Been long the stock a couple weeks now, already up 40% total, and plan to hold through the next cycle. Plus,
I
if one
assume
of
you're
them
buying.
goes bankrupt, then I've got a whole bunch to fall back on.
I assume you're buying leaps then, considering the next cycle's not starting until 2024.
I'm just holding
He
stock.
probably has shares.
Oh, I got you. Shares.
Yeah.
All right.
So midterm semi degen, but the shit's like $1 a share for some of these things. It's just fucking stupid to not, because there's enough of us that are going to ape money into Bitcoin that it's not going to tank to zero.
Yeah, I mean, Bitcoin won't ever hit zero.
Does anybody know if there's still like a glut in the market of what they called the miners? Nvidia was having trouble selling their 30 series or whatever. Is that still going on?
Well, I mean, the problem is that the largest proof of work network switched to proof of stake.
Yeah.
So, and that's not going to change. So, I mean, best of luck. Hopefully some great video games come out. That's pretty much their only hope.
Yeah, and a lot of these companies that went bankrupt are trying to use their mining equipment as collateral. I think Genesis or whoever the hell they were lending through, they're trying to do that to pay up for their bankruptcies. So they'll be flooded, and half of the demand has been crushed.
Yeah, and there's also the hardware problem of no one wants to buy cards that were used for Bitcoin mining, or I should say Ethereum mining, because they really put those cards through their paces, man. So, yeah, that's a tough place to be in, for sure.
But World of Warcraft would be a lot cheaper to get in on the good FPS.
Hey guys, has anyone talked about Hasbro's earnings and job cuts?
Hopefully they fired their CEO. That guy's a moron.
Yeah,
Dropped like a rock this morning, that's for sure.
Yeah, and again, last night they reported, and I know it's a stock that we bring up quite a lot, so just didn't know if anyone had any action in that, if you will.
Not here. Something I did want to get the audience or whoever's opinion on. Bank of America last week or week before, all of a sudden, with their partnership with Zelle or whatever, has customer money disappeared, right? Just poof, gone. Tons of people. Nothing happens. The stock goes up. Can anyone help me rationalize this? Because I mean, I can obviously come off my puts, but shit, man.
Yeah, sure. I'll help you out here. Bank of America does not make most of their money off of Zelle transfers. Also, that is a Zelle issue, not a Bank of America issue. But obviously, it is intertwined with Bank of America. And then furthermore, they do have a report on their website showing that that has been resolved.
Okay. Just figured there'd be more of a uproar or something when people are like, "Oh shit, no money at the bank."
Have you ever used Zelle?
No.
It's a piece of shit, so I don't think many people are using it, to be honest.
And Bank of America, for their own part, they stepped up and they addressed it immediately. They didn't try to make any excuses or anything. So they handled it well in terms of the PR. So that was a temporary glitch.
All right. Good on them then, I suppose.
Yeah, and it's not the first time, with all due respect to your puts, that
they're
Zell
fucked.
They
are
so-
fucked.
Well,
it's not like a Wells Fargo that engaged in 10 years of robbing their own customers. This
But
was
you
an
know what,
honest
Ignis?
this was
I
this
do
was an
better than the
honest
short Wells
technical
Fargo.
error. Well,
So the conclusion is that if you want, take some profit while you can, if there is any. But that is not any advice by any means. It might tank today. You know, it might be a lucky day. As Opinion has it as a red day in the background. So we'll see.
Ooh.
I just want to say it's not my choice. I mean, the pre-market is red, and it held red through economic data.
That is true.
Okay, guys.
We know you're
So-
manipulating the stock market with the background color opinion. Don't try to cop out.
That's true. That's true. Okay, guys. So PCE inflation declines to 4.4% in December. That's the core PCE. That was from 4.7% the same period year over year. On a monthly basis, month to month, it went up 0.3%. If you want to do a month to month comparison on that.
So market should be green.
Well, in this market, good news is good news. No, good news is bad news, and bad news is good news in this market. So,
Yes, that's true.
All right. Well, I just wanted to say something real quick. So I'm very much of a kind of like bear, you know. I'm not very much into the big like the bull market, especially with like looms of recession talks and everything, and the fact that CPI reporting is due upcoming on Valentine's Day, and what is it, February 14, right? And the expected CPI reporting was supposed to be bad. So I was just wondering what keeps driving up all these stock prices when there's so much like optimism, when people are just ignoring the what's expected. A lot of stocks are supposed to be doing poor earnings. CPI is going to be poor. I mean, that's what I mean. Obviously, it can change, but
Can I just offer my my relatively
Sorry.
uneducated.
Hold on. Just before you continue, whoever's tapping your mic, can you please stop? Or like, if there's any vibrations that you're hearing.
Yeah, I tried to mute everybody. I don't know whoever's doing that yet. Please stop.
Okay.
If
I can
fast opinion. Sorry. I do apologize, Imperator. If you are done talking, if you could just mute your mic though, so we don't have to get on here. People can finish their thoughts. Go ahead, Imperator. I do apologize, opinion.
Oh, no worries. I was just gonna say my theory about why stocks are going up, like that other guy was just asking, is if you look at dumb money inflows versus smart money inflows, like the retail FOMO is objectively happening right now. Like dumb money is pouring money into not just meme stocks and Tesla and stuff, but just in general. Meanwhile, smart money is literally like not doing anything right now. And if you look at the volume on SPY, it's been below average for like a while now.
That is a very good point. So, dumb money versus smart money. The stocks are going up. That means we're winning, right?
PCE report source data. I put it in the comments if anybody's interested. It's page 12. It's a direct link. So if you want to look at the difference between durable and non-durable goods versus services, services is still running hot. So until that starts cooling off, we're not going to see negative print at all. In terms of money flows and why the smart money staying on the side of the lines, let's say. Oh my God, that was tough to say. Well, you can look at the 5-year or 2-year bond. You're getting 5% basically to sit on the sidelines and do nothing, whereas stocks keep kind of grinding lower. So, pretty simple idea there.
You could also look at the stocks that have reported earnings so far this year. It's been mostly in the financial sector, which is actually a sector that's been deeply depressed by low interest rates and the pandemic. So the companies that you've actually had reporting so far are actually probably the companies that are going to be performing the best over this earnings season. Next week is the week that you should be looking at to really determine the direction of the market as a whole. So it's kind of like a rising tide lifts all ships. The financial sector is doing well, so it's giving you this impression that the entire market is doing well, but it's not really true. And once we get into next week, we're going to probably see where the market really is and how the entire population of traders actually feels about the market as a whole.
Yeah, to extend on that yield conversation, the 2 year yield, first of all, years overall went up recently. The 2 year yield is trading at 4.199%. So for any hedge fund or any management, like asset management, why would they hold real estate earning a 5% cap rate when they can just buy bonds, 2 year bonds, and just wait it out and have that 4.1, 4.2%, and don't have to deal with any of the expenses that come with owning multifamily real estate as well. So the more we keep increasing the treasury yields, the less incentive, I guess, these hedge funds have at investing in real estate, right? Doesn't that put downward pressure on the market, on the RE market as well, or less demand?
Isn't some of the value of real estate is managing risk, because you can control a lot having to do with the real estate, where it is,
right,
who your clients are. So a bond, you're not much in control. You're secure.
But you're not risking anything in
senior.
a bond.
So
well, the downside of the bond is you have to tie your money up for as long as it is, unless you want to risk, selling the bond at a lower yield.
Right, but it's the same thing with real estate. I mean, you tie up your money for a long with these asset management firms that invest in real estate.
Well,
You pretty much tie it up.
I mean, real estate is classic, tax sheltered investment as well. So if you want to save on your taxes, has anyone brought up the SoFi? I know you guys bring up SoFi a lot. They report on Monday morning at 7 a.m. So I don't know if that interests anyone.
Yeah, SoFi seems to pop really big like the last 3 or 4 earnings that they've done. So I might buy some calls, just like FOMO.
I think the best bet, right, and especially with CPI coming up, buying spreads, would be probably a great idea. Monday? Because I think Tuesday is the release of the CPI, the consumer report. So I think spreads are the way to go for in terms of options and not holding anything, because the market can go sideways real quick on everybody on Tuesday when it comes out. So I mean, this is in 2 weeks, but or 3 weeks from here, but it's still kind of crazy because CPI could literally just put us into the recession. I mean, even though we had a pretty good report for this last month, or I guess what do you call it, December.
I've been watching QWERTY over the last little while, QRTEA. Yesterday it popped quite a bit, 13%. And when I look at Hardy's option chain, that delta neutral gamma max chart, you can see that its price is over its gamma max and delta neutral. Now, I don't know what that would mean. Maybe someone could just tell me what that would mean in layman's terms.
If you scroll down on that same page you're looking at to see the chart, he does have an explanation of those things and what they mean to him. Without looking at it myself, I would say look back to see how the price has reacted to Gamma Max the previous times, if it reacts in a somewhat of a pattern, there might be a play there.
Thank you.
And then,
Hey,
Titty,
Dan.
you mentioned dumb
Oh,
money earlier, so I'd like to go ahead and throw in a play that I have. It's a dumb money play. I am looking at Dole Calls, DOLE is the ticker. $17.50 strike calls dated
my
out to
man.
8/18. I got news. The thesis, this is the only thesis. I got news. A raven told me, a very nice raven told me that a certain company that we all hate, Citadel, is actively shorting Dole. So I'm buying super far outdated and super out of the money calls on Dole. That's the thesis. Don't
How
follow
much
that
are
shit if you don't believe in it.
how much are you paying for those contracts?
Yeah, that sounds like a
They're
load of shit.
$5 for each contract, so they're 5 cents a piece. That's pretty fucking cheap. So I'm going in. I'm buying 2 contracts right the fuck.
Well,
now.
what's the theta and delta on that?
Well, he said they were far out expirations, so I wouldn't worry about the theta very much.
Yeah, I'll have to take a look. I might sell those to you, Mask. I'll have to check out that option.
Holy crap! It says there's no one else in the market offering this buy, offering to buy this option. Holy crap! I'm literally the only one who wants to buy this fucking option right now. But you better believe I'm gonna be the first.
Yeah, I got a
Last
1250
minute.
call.
You got it.
No, I was just saying, I think Dole, after a good summer ahead, we're going to get a lot of fruit, a lot of bananas and pineapples. Stock's going up, baby.
There was a company that came across my eye yesterday. It's a REIT that specializes in farmland, FPI. And I wonder if anyone's looked into that before. Similar to the Dole play, like a lot of their farms are in the central part of the U.S. And I just wondered if anyone had looked at that REIT, FPI.
I haven't heard news about that.
I guess one of my concerns there would be, what do the water rights look like, and what does the water rationing look like in those areas? If you look in sort of the central U.S. and the Aguala Aquifer, generations of heavy pumping has led to some of the wells going entirely dry. So it's not enough just to own the land. You have to own the land that still has active wells on it, or else you're going to have reduced crop yields. So I'd be interested to know a little bit more. How deep do they go in sharing exactly where their land is? Is there something I can look at to take
There
a look
is
at
a map in their investor presentation, and they also talk about water availability. That's a good point. They say they seek to acquire farmland where water availability through precipitation and irrigation meets the needs of the crops.
Well, I mean, I would hope that they would say that. Doing it is a different matter.
I mentioned this stock last week, I think, when Opinion was asking about recession plays, but it's a specialty REIT, Iron Mountain IRM, paying like 4 3/4 dividend. It's about document retention. So even if companies close up, there's a lot of companies and industries that have legal holds. They have to hold this information. And if you have more businesses and business goes as normal, they still have to pay for this cataloging of information. And it's a nice ongoing, it's a nice one to do in like a drip program, dividend reinvestment program. retirement account. I like this one. Let it sit, let it grow.
Scald, I posted their investor presentation link in the comments, and page 6 is where they have the map. I guess my play is, or my thoughts are, as the world becomes kind of more chaotic to hold together, the farming assets in the U.S. are going to have to be beefed up to supply food as they lose control of South America with the protests in Peru and Brazil and etc.
Yeah, I'll take a look at this FPI. It sounds interesting.
So I've got a play, which is not really a play, it's really a buy. Archer Aviation. This company does the electric vertical takeoff and landing aircraft. Imagine a giant drone that transports people. Right now, the company's trading at 256. The book value per share is 296. They have their market cap is about 600 million, but they have a $1 billion contract with United to provide 200 of their vertical takeoff and landing aircraft starting, I believe, in 2024. So right now they are still kind of trading low. It looks like on the books, it's going to look like a company that's losing money. But if everything goes forward with their approvals, and I think they will based on the fact that United put such a large investment in, I think that this is one of those companies that's going to be turning a profit probably within the next year or so. So I feel like this is probably going to be the opportunity to get in on this stock. So again, it's Archer, ACHR.
Speaking of water, I gotta play, but give me a minute. Sure if my mic's working.
All right, so I got an options play, I guess. I'm looking at Chewy. They just been upgraded today by Wedbush to a price target of 55, and I'm looking at around $48 call strike. They're starting to push right now. We'll see what happens. And I'm in at 47.50 for 0 DTE. Let's go.
Sound a little nervous there.
I just doubled down on Google puts for so my rationalization on it. I mean, I did my due diligence and took a look at it over the 6-month, 9-month, 1 year chart. It's towards the high. It's towards the high of overbought. VWAP showing that it's towards the top of it, so a reversal in trend should happen. Our MACD is also about to switch and start going have a reversal. So the only thing that could really affect it is either really good earnings or if like the rest of the tech sector releases good earnings prior to Google releasing its earnings on the 3rd. So
Did Google's stock react at all to the antitrust?
it did a few days ago, but as of right now, it's still up. It's gone up, but I just doubled down quite a bit for the 24th of February puts right now. So we'll see how it's going with a $98 strike.
I'm wondering if anyone's still holding their Bed Bath and Beyond puts, or have they sold and made some money?
I still have 3 Bed Bath and Beyond puts.
They should have sold, to be honest. Bed Bath and Beyond is not going up anytime soon, unless we see like the Golden Cross, you know. But that's not gonna happen.
When it initially dipped down to the sub 2 range, I sold my puts and I didn't get back in during the pump. So I've been out of it for about a month, give or take. Actually, 2 weeks I've been out of it.
I had some puts for like 2 weeks, hoping they would declare bankruptcy finally over the weekend, but it didn't work out.
I'm excited for when it randomly runs from like $1 to $5 because, you know, why not? Let's just do it. Also, whoever's eating their mic, if you could not do that unmuted, that would be cool.
So I'm curious, there was talk earlier about the CPI print coming in bad, leading to a broad market sell-off. Given the fact that this is going to be the first time where the CPI reports under the new calculation, why do you think it's going to be bad? Because, I mean, they've literally changed how it's calculated in a way that implies that it's probably not going to be. So I'm just wondering, like, what the logic is there, or if you think people are going to disregard whatever the number is and maybe go back to the older way of calculating CPI. I mean, what's the theory?
Is that starting this one? I thought that doesn't start until March for the new.
Nah, CPI reports literally coming up like February 14th. So it's
No, I was asking if they're using the new method. Oh, I thought that wasn't starting until March for the new
No,
method.
I thought the February report was with the new method.
Well, either I know that they're still using inflation as one of the calculators, and inflation is supposed to be at an all-time high, and I think the inflation report is supposed to be coming out as well with the consumer report. So it's like inflation has a large accountability for the formula. So if you take a look at it, if inflation is this high, it's not just me. Like you can look at the news and you can see that people are expecting. Kramer said that the CPI is probably going to be bad. I mean, I don't really trust a lick of what Kramer says, but what CNN released or CNN Business released reports that expected inflation reports, and if you take a look at it, it's pretty bad. Both housing, income inflation, consumer inflation, and it's that's why most people are saying that the CPI report is going to be terrible, and then it's going to affect the S&P 500. It's going to affect most of the stocks, and we're going to be going down into a recession. Inflation has been
hold on
going
one
up for
second.
the past.
If I may add, because you said something earlier too, I wanted to interject and I didn't then. A CPI cannot create a recession. That's just not true. That's not the definition of a recession. Recession is usually 2 or more quarters of declining GDP with like more unemployment, which we kind of had last year, and they did change it. But they're going to have the FOMC meeting next week. So what you're talking about in 2 weeks is kind of moot. The next meeting isn't for another 5 or 6 weeks after that. So there'll be lots of other information there between there and then. So it's not that that's not important, but I don't want you to read too much into the doom and gloom and think that a bad report is going to cause everything to go to shit, because that's not really. I mean, it does have effects on market, but usually it is short term. So just wanted to add that. I
Yeah.
think there's going to be more information before they have to do anything with rates again. So look further out. I don't think that's the inflection point that's going to be a big market mover.
Well, and also I would say that if they change from the 2-year rolling average to the 1 year, it would have to be above last year's inflation numbers, which last year's inflation was the hottest inflation we've had in decades. So if they change from 2 years to 1 year and then they report, it would have to be a catastrophically high inflation because it would have to beat last year's numbers, which we're seeing evidence that that's probably not going to happen. So, I mean, that's why I'm asking about when do we go to the new reporting? When do we go from the 2-year average to the 1-year average? And if we're going to the 1-year average on this CPI report, then I would expect it to be lower because I mean, if it is higher, then yeah, I mean, recession is obviously in the cards then at that point because obviously inflation has spiked to a new high. But there's a lot of evidence that inflation is not necessarily accelerating. It's just at a high percentage rate, and obviously it's compounded, right? Because it's year over year compounding month over month. So, you have 5% inflation off 8% inflation. That's more than 13% inflation, right? That's that's just the basic math of it. But I mean, I think that's what we're looking at here.
Hey, I'm on the website right now. I'll read it. Starting with January 2023 data, the BLS plans to update weights annually for the CPI index. So it looks like they already changed it. They're only going to use 2021, and that was as soon as the 2023 CPI. So they have changed it already. That helps.
Is there any change to how, like, what's included in the CPI basket?
No, we've talked about it before, but basically they want to go look at 1 year of data versus 2 years of data. So they're going to go back and look at the 2021 data versus looking at the 2021 and 2022 data, which is what they've done since they've looked at it.
My guess is if they change it, it's to make it look better, not to be more accurate.
Correct. And I think that's what Scald is implying, that, yeah, you've made it, you're obviously going to shine it in a more positive light. So if anything, CPI should take a big, it should fall way out of bed, giving them more ease of stopping with like 2 more quarter point rate hikes and then just stop. It's going to give them more clearance to do that.
Yeah, and what I was saying the other day was not necessarily that the Fed would reverse direction, but that these new CPI numbers would allow them to push the narrative that everything has succeeded and that the terminal rate's not going to increase anymore. We have a couple quarter rate hikes coming in, and then from there, it's done, right? And then they just let it ride. Which, I mean, that's obviously a bullish case, but just what I think is going to happen.
So I just want to point out, because I know we have a good chunk of recession crowd here, which is fine. As far as like official recession declared, that's done by the NBER in the US, and they do that like months later. It's a collection of like a bunch of economic nerds who, like, if there's a recession now, they're not going to say anything for 6 months. So just keep that in mind. When you hear people say like 2 quarters of negative GDP and stuff, like that's a very nice media definition, but an official declaration of recession for the US does not happen until months after we're actually in a recession. So if you're like waiting for that news, it's going to take a long time.
Yeah, that's a great thing to say. And oftentimes, by the time the official recession is out, unless the economy has slipped into a depression, which thankfully we haven't had one of those in 100 years, typically it's already entered a recovery period by the time that the recession is officially declared by those guys.
And now I'm going to make my crazy statement. I actually think in some ways the declaration of a recession could almost be bullish for the market, because I do think there's a lot of money sitting on the sideline saying recession coming, I don't want to go in, recession coming, I don't want to go in. And if you're bullish, one of the worst things you could see is we never get one declared, and it just kind of stays stuck as people constantly say, but I can't invest, recession coming. And that could actually be the bad scenario.
It's so funny to think that, like, in my head, to think that the economy is slowing when they're doing all this investment in manufacturing here, and all the military production that's going to just, it's running at full speed and get worse. All the activity with the liquid natural gas over into Europe, I just don't see how any of all that activity is going to show like positive factors, and they're waiting to kind of crush the employment. So it's just very strange. Like, it's not a recession where the government's saying, we don't need to spend any money. We got problems with the debt.
Didn't something like this happen in the 70s when we had high inflation, and then we had spiking in gas prices, which these things should sound familiar to everybody. And one of the causes or the purposes behind it was an extended bear market. It wasn't a terrible bear market, but it was a general slow decline over a period of about 8 years. And part of the reason for that was, at least my understanding, was it was a transference of values, mostly the microchip. Mostly we had new technologies, but we didn't exactly know how they were gonna be used in the consumer marketplace. And with
one of the major reasons for the 70s was OPEC and their control over oil prices.
I guess I kind of look at that as this activity going on with Ukraine is kind of it's on purpose, in the sense that the U.S. kind of knew it was going to happen and is antagonizing it. In the 70s, it was something that they had to fix because it just fell upon them. This is an intentional thing, in the sense that they know, hey, you know what? You give, if it's a hot labor market, employees are going to want lots of raises, and we don't want to give them any money. So let's crush them with the interest rates. And then you've got the war where they're like, okay, there's a pipeline providing gas from Russia to Europe. No, that can't exist. Blow it up. It's blown up. Now we got to ship all these liquid natural gas containers. It's all on purpose. At any point, the U.S. could say, let's talk. And they would negotiate a peace if they really wanted it. There's been lots of news about how Russia said, let's negotiate. Let's talk. Let's talk. Come on.
Come on. Russia's shills around now on this.
No, I'm just saying that you just have to watch the news, man.
I'm going to go ahead and take off.
Okay,
guys.
I'm in at the 410 strike calls on SPY expiring today.
Nice.
Thanks, Titty.
Let's go ahead and take off the tinfoil hats for a moment. One thing I will say, just a final thing about stagflation, is that one of the main differences is that the U.S. is now a net exporter of oil because of the miracle of fracking. What up?
Which is a lot of profit for the U.S., right? Like that's going to be good for the economy.
It's not good. It's not good.
And it's not profitable because basically, at least when I was very closely watching the oil industry and when I was involved with it, you had to have a $43 price per barrel for a fracking well to be profitable. That's come down a little bit, but it's still a lot higher. Free flowing oil well, you can do as little as like $4 or $5 a barrel and still make money off of it. Whereas fracking it's more about energy independence and how that strategically helps the United States in a geopolitical sense than about making a profit.
So free flowing oil has already peaked, right? We're now on the declining side of that curve for free flowing oil. That happened in like the early 2000s. The reason why oil prices even are able to maintain is because of shale but those are going to hit. The peak shale is going to hit probably in the next decade.
Yeah, and that's one of the reasons I think you're seeing such a push to electrification. They're front running. They're front running it, right?
So the other thing on the stagflation is like a lot of the policy right now doesn't make sense, right? So you got on the one hand you've got the government trying to bring manufacturing back to the U.S., but you have the lowest labor participation rate in 50 years. So who's going to do the manufacturing? You're going to have all these plants, and there aren't going to be people that even want to work in the plants. And on top of that, you also have people that like our labor force has not been trained for bringing manufacturing back. It's going to take 5, maybe 10 years before you can ramp up train a labor force to do the kind of manufacturing that you're going to want to do. On top of that, you bring let's say you're successful in all of that, and you've got this stuff going on with the war in Ukraine, and it's causing the dollar to rise, which makes our products more expensive in foreign markets. So you're manufacturing all this stuff, but the world can't afford to buy it because it's too expensive for them to buy because of the dollar. So like how are you going to reconcile these things with the policies that they're trying to put in place right now? And then you've got an inflationary environment, and then the government is pumping even more money into the economy. Instead of cooling it down, they're pumping it up even more. I mean, none of this stuff, when you sort of take a seat back or take a step back and look at this, it's like these things don't seem to make sense. It's like somebody had these brain farts, but there's no reasonable way to implement it.
I agree. Like,
rabble. How is the government pumping money in right now? Isn't the Fed unwinding with QT?
I think they're pumping money in the military manufacturing. All that announcing of military tanks, that's all U.S. and that's all local production.
Yep.
It's the major it's what you guys make.
It's fiscal versus monetary, right? Monetarily, the Fed is tightening. Fiscally, you got, what was that, the Incentive Inflation Act that just came out? That's pumping money in. They basically offset each other, do nothing.
That's right. And that's the other strange thing. It's like you got the Fed trying to pull money out of the economy, and you got these buffoons in D.C. that are pumping money into the economy. It's like one guy's pressing on the brakes, the other guy's pressing on the gas. I mean, where's this? How's this car going to end up? Like the stuff that they're doing right now just doesn't. It doesn't make sense. Yeah, the best thing that could happen to America is for the government to be shut down. The one thing that Donald Trump did well is he kept politicians focused on him like a cat on a laser dot, and that was the best time in the history of the U.S. for business, because government was not involved. They were all focused on Donald Trump. So I give him credit for keeping the attention of politicians on him and keeping it off of the American people.
So something that could be bullish for the economy is China reopening, because China tends to actually export deflation. So that could be a good thing in the grand scheme. They manufacture their products and sell them for less, and that's usually pretty deflationary. So there's a positive.
So if this is really happening with China reopening, and they're going to start consuming more oil, I mean, crude has been slowly ticking up for the past few weeks. Isn't that going to drive headline inflation back up with the rise in gas prices?
So they'll pull up prices of the raw materials that they use, but they've always been an exporter of deflation in the sense that the products they produce go into the market for less on the consumer side, if that makes sense.
But on the other hand, on the other hand, there was that report that recently came out how Chinese citizens have accumulated over $700 billion in savings over the past year or two. So aren't they going to just spend a bunch of that money on their own, like buying their own products essentially for a little bit at least?
Traditionally, Chinese people are very frugal, extremely frugal. Like if you go to China, they tend to save a lot more than a lot of other people do.
And in China, traditionally, their investments tend to be geared towards real estate, which I'm sure you're all aware of when you heard about the Chinese real estate problems going on. That tends to be where people who have money to park their money.
Yeah, and speaking of China and increasing their oil consumption, they don't have any qualms with importing it from Russia.
So not to, I love the macro talk, but real quick, if we could talk about Tesla real quick. I know everybody had the thesis that they're just an auto manufacturer and the value is going to go down. And as we've seen over these last couple of weeks, it shot up an unbelievable amount. And I wonder if we're changing our opinion that it's now more of a tech and energy and battery based thing as well as just being an auto manufacturer. Plus, I know that they're working on the scale with their gigafactories. So I wonder if people are thinking the value is, more appropriate now than it was before.
Well, based on what Elon said during his shareholder meeting or during his earnings meeting, they're definitely reclaiming the technology moniker for their company rather than auto manufacturer moniker, because he's referring to cars as robots on wheels. And they're also, in addition to the cars that they're making and the AI that they're using for the full self-driving in the car, they use like different flavors of that AI for their humanoid robots and some of the other stuff that they're doing. So they're definitely like more and their AI that they're using internally is more advanced than anything any of the other car companies have. And Elon is definitely trying to reclaim that perception of Tesla being a technology company rather than a car company based on how he was talking at the meeting. So if you still think that they're a car company, I think you're probably going to be wrong in the long run. Because the other thing that he mentioned is that they're working on some new things. That he said are very exciting and very advanced technology, but they haven't announced them yet. So I don't know what else is coming down the pipeline, but they're definitely leaning more towards being a tech than a car company.
Yeah, look at his mega pack.
Sorry.
Like his mega pack, the big battery, that's supposed to be generating a lot of revenue now. He's sort of playing Settlers of Catan with that, so he's got all the mining hexagons on the board, and that's supposed to be a big revenue generator.
One earnings call and y'all are smitten again. Before this, everybody was complaining that Tesla was overpriced because it was more than the market cap of all other automotive manufacturers on top of each other.
Well, the wheat's been separated from the chaff a little bit coming into this quarter between Tesla and the other automakers.
I think it's a little premature to assume that AI is the most advanced for Tesla, maybe in the public spotlight, but let's not forget that people have their underground labs, right? And also the opportunity to present that to the car companies itself to sell to them to get a head start on Tesla. I think everyone's after the bull here, right? Everyone's going to go after Tesla in regards to try to overpower them in the EV market. But that's not to say they're not a great player. I just think it's a little premature to say that they're the ultimate dog in the race.
Ultimately, Tesla is a car company. That's their core. Until these other sectors of their business start making more than their cars, they're a car company. And anything else is just it doesn't make any sense to me.
Well, one of the biggest contributors to their margin is going to be their software, not their cars. So all the cars that they have out on the road right now that are running on hardware platform 3, version 3, are subject to getting the latest version of the full self-driving software, and that's a $15,000 addition to the margin of the car that isn't there right now. So even if a fraction of the people that have that hardware platform upgrade to the full self-driving, it's gonna drive their margins based on software rather than the cars themselves. And you wouldn't call you wouldn't call Apple a phone company, right? You'd call Apple a technology company, but the phone just happens to be the platform that their technology sits on. And I think based on what Musk said, they seem to be treating the car the same way. It's like, yeah, it's a car, but that car has a lot of technology in it that's driving the value for those vehicles, as opposed to having four wheels and a steering wheel, right?
Yeah, they said they're getting twice as many orders after the cuts, twice as many orders than what they can produce. So they're getting 2 times many orders than their production numbers, and they don't have the same bottleneck in their factories for electric cars as other companies. I mean, they're the volume leader. So, I mean,
Yeah,
Where do they
definitely is gonna put them
manufacture
ahead.
most of their cars? Where's
What?
their biggest manufacturing facility for cars? Is it in the U.S.?
They're gigafactories. So they build them where they sell them. Like there's one in Germany, there's some in China, there's another one going up
One
in
thing I was thinking of, like other car manufacturers, especially in the U.S., have to deal with unionized employees, and I know Tesla hasn't had to do that yet, and I wonder if there's a risk that that might be a factor that might eat into their margins. As they grow and become obviously the leader in auto manufacturing in the U.S., how will their employees be prevented from unionizing when they see, the other manufacturers kind of have an incentive for Tesla's employees to become unionized because it creates a level playing field in a way.
Well, that
Well,
might be
the
why they
J
open a factory in
manufacturer.
Mexico.
Yeah, but the J manufacturers aren't unionized, generally speaking. Like
Well,
Honda, Toyota, Nissan, they aren't generally unionized. But yeah, I see what you're saying.
and the factories and the factories
I'm
are
surprised
highly
the
automated,
change.
so they don't have necessarily as many people.
So where are the workers? Like when someone buys some of that Tesla equipment, what kind of job are they going to have? Like I look at white collar jobs in the U.S. and North America becoming harder and harder to find. And where are the customers that Tesla's going to sell to? Their mortgage rates just went up. Their cost of living is increasing at an exponential rate, and they're going
Not
to
necessarily. A lot of us
buy a
have
new car.
Well, that's real long
some
term,
speaking,
though, right? I mean,
hold on a second. So speaking as an American, our interest rates, most of us don't have variable interest rates. There's a lot of people who can't afford houses now because of those. So that is true. That will affect people's pockets. But the majority of Tesla owners and buyers are somewhat, even if it is a white collar recession, most of these people are buffered, if you will, and do have enough savings. And I don't think their key market is going to go down. So I'll argue both cases. With the recent price cuts, they show that they do have some pricing ability, and they even said gross profits or gross margins would still be over 20% last year. That's why the stock rose. So I agree there was a lot of bashing on here. I've been in and out of the stock. I was a long time bull, but he got a little too crazy for me. So honestly, what I think is going to happen is probably price run up to 170, maybe even 180. Could go up to 200 when he says he's done with Twitter being the CEO, and then it may go down. But I think it's a fundamentally good company. It's flawed with his lies and his personality and his ADHD, I'll just call it. I think he has it. But you got to take the good and the bad. There's the risk reward there. So
I totally agree with that. Do you guys think that brand perception and CEO perception is going to make this short-term rally that we've seen somewhat unsustainable? Do you think there's going to be a near-term correction? I see on stock splits, a lot of people think it's going to go back down to 150 for seemingly no reason.
I think
I hope it goes down to 70.
One of the things that I just want to talk about here when it comes to CEO perception is that unlike most companies that have marketing and PR divisions that focus on the company, Tesla has never hired a public relations firm. However, Elon Musk has hired a public relations firm for him personally. So what I am driving at is that the brand is more Elon than it is Tesla, compared to, say, a typical company where no one really cares who the CEO of a random bank is. Like, it doesn't matter, right? Because like that's not really what's being marketed. Whereas here, what was being marketed was Elon Musk, and so his actions.
I'm sorry, Scald, but we do have a live one. Spy just did a Scald squiggle and it's fucking ripping. It was trying to form a second.
Nice. Scald squiggle.
What was that?
Is a Scald squiggle. It's a pattern that I've been noticing that's been appearing on various stock tickers. It did do a stock Scald squiggle. Look at that.
Which ticker?
Spy.
Oh.
Yeah. The Scald squiggle is two red dojis, or two red candles, followed by two green candles, followed by a spinning top doji, and then the movement of the stock is based on the previous 15-minute average. So if it was going up before, it continues going up. If it was going down before, it continues going down.
I'm telling you guys, man, all you bulls are just being exit liquidity for the institutions right now. I mean, all the hype stocks are doing the same thing as Tesla, Nvidia, AMD, I mean, even fucking Apple. It's all going up for no apparent reason on lower than average volume. This is all just your exit liquidity.
But
if you just zoom out to the year and a half,
Tesla was not for no reason. Tesla was not for no reason. I mean, they reported the highest production in their history. They reported that they're gonna be increasing that production this year. They're on target to 1.8 million production instead of 1.3 million. And they said that if there's no extraneous headwinds like a pandemic or anything like that, they could, based on their production capacity, produce 2 million vehicles this year.
But it was literally 3 weeks ago that everyone was all doom and gloom about Tesla because the number of deliveries they made by the end of last year was like abysmally low. How did it all change in 3 weeks?
No, it was no. It was not. You guys, if you guys are listening to the media way too much. Okay, the analysts expected 418,000 deliveries in the fourth quarter. They delivered 405,000. So there's a 13,000 vehicle variance, which is like 3%, which is a rounding error, basically. That's like less than one standard deviation. The one thing that the media forgot to mention when they reported those figures on the deliveries in the fourth quarter was that their production had increased by 40% year on year. But the media didn't focus on that. They focused on a 3% shortcoming in the fourth quarter deliveries instead of the 40% year-on-year increase in their total production.
And the highest margins in the whole car industry.
And the highest margins in the car industry.
And the tax credit. And the price and the change in demand. Everybody said the tax credit was going to do nothing for demand, and Tesla experienced its highest demand in January than it's ever experienced.
So much so that after reducing the prices to be so that they can qualify for the tax credits, during his presentation, Musk said that they actually increased some of the prices on some of their products a little bit because of the demand, the incoming demand that they were seeing. So it wasn't Yeah, so it wasn't because of nothing. It was they actually reported great results, and then there's other tech companies that are going up in sympathy with that because they see it as a positive thing. Right? There's light at the end of the tunnel. Yeah. So is it a little overhyped, and is it exit liquidity for some? Yeah, I hope Tesla goes down to 70 so I can buy back in. Honestly,
I guess the question then to pose is, okay, revenue grew, which is fantastic, but gross margins collapsed. Like the gross profit quarter over quarter is basically flat.
It's still higher than every other car company.
And that was not because of anything that they were doing. That was because of extraneous factors like the pandemic and the supply chain issues that they had to pivot to account for. And those things have now been done. And even more so, they said that if they've even discovered from an engineering standpoint, there are engineering things that they can do to increase their margins. And then they also have like this.
Batteries are coming out that are a lot cheaper.
If they lower prices, how are they going to keep margins increasing?
The software, full self-driving is $15,000. For the complete package of full self-driving is $15,000. even on a $150,000 car, that's a 10% increase in your margin without any associated increase in costs, because it doesn't cost them a single penny to push that out to the. There's no manufacturing costs associated with pushing the software out to the devices.
Let's not forget Mitten.
Yeah, did anyone notice when they lowered their prices, did they also, like some of the features, the cost of features increased?
Yeah, because basically what they want is to get you in the Tesla with the current hardware, and then they want you to upgrade based on the level of full self-driving that you want. If you guys really want to get answers to these questions, look at a transcript of the earnings call. He goes into detail about all the different unlock levels, and there's a letter to the shareholders that explains what is recognized at the time of sale and what is deferred in terms of how they see the value of the car driving off the lot.
Exactly.
Well, actually, to clarify, gentlemen, they want you in the car with the same hardware, just different software, right? You don't need to change out your hardware once you have it. That's the whole.
That's correct.
Well,
that's correct.
What they're saying is that the hardware 3 right now, in terms of the value provided to the person, not 100% of the full self-driving value is recognized when it drives off the lot, but there is a way to pay to recognize the most value of it before you drive off the lot. So that's basically what they're trying to communicate. It's like some people have an option to get into a Tesla, but not unlock the highest level of automation that's available yet. Other people can choose to unlock that at a later time. So you kind of have a choice. Like, I'm not going to pay to get the full unlock, but at some point I will once it's fixed. It's kind of like when you wait for the iPhone to get all the bugs before you upgrade to the newest model.
Yeah, and the price cuts allowed the car to qualify for the tax credit, so you get a even bigger discount because of the price cut, and then you pay a little bit of that back on the.
Yeah, they basically gave you the discount on the full self-driving because they reduced the cost by effectively $20,000.
Can I chime in here on? I would like to chime in on self-driving. And okay, so this is my point of view. Self-driving is being pushed by marketers and people who in the industry, they have nothing really better to do than to wear suits, and they have these other guys that talk about AI, artificial intelligence, which people in my family have degrees in this, going back decades. The Tesla doesn't exist because it's a self-driving car. The Tesla exists because there was a material scientist named John Goodenough, and a long time ago, he did a rechargeable battery, nickel cadmium, and then
he's still alive. The man's still alive. He's still working.
Except he's 100 years old.
He is.
Yeah. So the thing is now it didn't really make sense before. Now it didn't make sense to make a Tesla. So Elon's getting credited for bringing it to market, and he should, because that's where the dollars are. But
they had Teslas 100 years ago.
He's also working on the next battery chemistry for next year and the year after that to be
right there. See,
be ahead.
That's going to be key.
Yeah.
The self-driving thing is going to be in the headlines. It's going to be, it's a glossy sheet of paper. The more significant thing is when
it's
you're
a distraction.
You're going to charge up a Tesla, and once you're finished charging it, you're going to be able to go 1,000 miles. You don't even have to recharge it for a long time, and it's on the way. And that makes
full self-driving is not fluffware. First of all, a lot of people don't even belong inside of an Uber, let alone behind a wheel of a car. Like, a lot of people should not be driving because they fucking don't know how to drive, right? And
That's true, but here we are.
Yeah, I mean, it's like icing. It's more like icing on the cake. It's not fluffware, but it's not really making it roll.
It is needed. It is needed.
Yeah. If it happens, Tesla's going to pop. If it doesn't, Tesla's still going to do well.
I feel like their biggest assets right now are the scale, and the volume, and hopefully, I'm a long-term bull, but right now I'm a bear. I think that they're going to start to lose some of that value when the competitors have similar technology released in the next coming years.
Well, and that was one of the questions. That was one of the questions that they asked him was during the phone call. One of the analysts said, "So, who do you see as your biggest competitor in the next 5 years?" And Musk's response was, "It's not any of the legacy auto manufacturers." He said that he sees their biggest competition coming from China because, quote, they work harder and smarter than anyone else that he's seen so far.
I don't know if I would
Just
trust
saying.
what he says on that, though. I mean, it's interesting and it's good to listen to, but I don't know if that would be an end-all be-all source for my
Sure.
Well,
he did pivot to AI on that, and instead of talking about batteries, because if he talked about batteries, he'd talk about China and CATL and BYD and other competitors that are right there with him.
I mean, he would know better than anyone else because he's in China.
By the way, Toyota did just replace their top executive with a new guy who's going to pivot towards full electric vehicles. So that's something that Toyota hasn't been doing until now.
Not a surprise.
I took my bags on those 410 calls on SPY. It looks like it is trying to do another called squiggle, so there could be more up on SPY coming.
Yeah, man, we could have a real moonshot today on SPY. I'm not going to lie. I'm still holding the 410s.
The transcript for the earnings call is in the comments for those of you that want to do more DD, but maybe it's time to move on from Tesla for today.
So Skull, what was your entry price on those 410s?
17 cents a pop.
17?
Yeah.
So hopefully those pay out for you. My entry, when I first said, hey, it looks like it might be going, I was able to get in around 7 cents. I'll check the exact.
Oh, Jesus. Well, let's take a look here. They're at 14 right now. I'm down 17% on them. You know, it's whatever.
I'm out of my puts. Enough getting my ass kicked today.
Oh yeah, no, it looks like it might be trying to resolve another one. If this comes out positive, then it's going to continue rocketing. And
I already exited mine. I might FOMO back in. Like I got out at like 16, 17.
I think I'm going to go ahead and double down here because why not?
Love a good double down.
I do too.
For how long? Are those all for expiring today?
These all closed today. These all closed today.
You guys have
Wait. You can get calls that don't expire the same day. When did they add that?
I think you have to have Robinhood Premium to get them that last more than a week. I think you have to be a gold member.
Yeah, you basically have to let you have to pay Robinhood's margin on their spread trades for an entire year, and then they give you the option to buy contracts in 5-cent increments that don't expire the same day. It's pretty awesome.
Also, Kimberly Clark it might be taking its leg down now. Ticker KMP. I'm on the road, so I'm not at my charts, but it might be doing that big dip down. I think maybe not today, but into next week or the week after, I think we will see under 125 a share.
Kimberly Clark is currently trading at 128.83, down $1.44.
The stock that I'm hoping for a downsies is Foot Locker, FL, Frank Lima. They have earnings on February 24th. Analyst estimates are that earnings are going to be negative. The GDP reports yesterday indicate that consumer spending is not in retail, and so I don't expect Foot Locker to do well. However, the stock is a value buy, in my opinion, over the long run. But I just think that where it's at right now and the way that analysts are revising estimates downward, that it should be trading in a $40 range, and it's trying to push for 45. If it gets to 45, I'm going to buy puts for February 24th and try and get out of them before the earnings call, because I think that it could still pop on earnings, but just looks really overbought here.
I really like Foot Locker. I came across them when I was doing my Victoria's Secret DD. They have the lowest debt to equity ratio in their sector, and they're locked in at a 2% interest rate. This is before the rate hikes. I would be careful with going short on them.
I'm not
They
shorting
probably
directly.
won't have a
It's
good.
just more so like a gamma max play. Like it crossed delta neutral, is pushing towards gamma max. It's a 50-day high, and like all the indicators look like this price range is oversold for how quickly it got there. So it's more of trying to get a price correction downwards before earnings. Like I'm not gonna short direct shares. It's just more of like a bearish and gamma max play.
Yeah. Okay. I did all this research probably back in August, September time, and it looks like the market has noticed what I noticed, and it's gone up. So there might be room to fall here for sure. I just would think that these fundamentals that I was looking at before JPOW started hiking all these rates, have been beneficial in these months.
Yeah, I think analysts and value investors noticed how undervalued this was, have pushed it to fair value. A lot of the analysts that were revising upwards had it in this $40 range, and I think it's kind of hit fair value now. Anything higher, like anything in 50, 60 would be overvalued. And I think because we're going into earnings, and because earnings has been kind of lackluster, especially for retail, while it may be great long term, I think people are going to realize that short term Foot Locker has some things to work on, and the uncertainty in their business model as far as brick and mortar still leaves a lot to be desired. And I hear people speculating on like who actually shops at Foot Locker these days anyway. But I digress. Like Ayat would say, just saying, check out Hardy's site. Looks like maybe 1 to 2 weeks out, buying puts would be a good idea.
Also, for anybody feeling extra degenerate, I do not believe Newegg is going to finish over $2 a share today. I went ahead and sold $2 strike calls yesterday. If somebody's really feeling degenerate, you could do a call credit spread, sell the 2, buy the 250.
Very nice.
Love call credit spreads, especially for Bed Bath & Beyond.
Oh.
Another safer way of being degenerate on it is just buying the shares and then selling the 250 or the $2 strike.
Back to Foot Locker real quick. I just did some due diligence, and I don't think I've seen anybody in my local Foot Locker in the last couple months. So I think you guys are onto something there.
So I have a curiosity question for everyone. Are is the group in general still of the opinion that within the next, let's say 6 months to a year, if not already happening, there will be a recession, or has that opinion recently changed? I'm just trying to get a gauge from people.
What kind of recession are we talking about? Can you give an example? Because I think that's where the line is in the sand, if you may.
Just
I
enough
mean, there's
to
only one type
justify.
of recession, right?
Yeah,
It's
yeah, like
two
just
consecutive quarters of negative GDP growth. Which is that going to happen in the next 2 quarters? No. Do people think it is? Yes.
Yeah, I'm not
Sure.
saying whether or not it will. I'm just saying, do people? Because
Well,
I'm just saying,
if we're
I know
gonna
like
be
a few months
politically-
ago, everyone seemed to be saying it's going to be 2008 all over again, and now it seems like that sentiment has changed. So I'm just kind of curious.
I think in the next.
Go ahead.
I think in the next 6 months, home builders will see a significant correction.
I would say if you don't want to be politically correct, you want to think outside the box, and you want to be not stuck in the box, as Scald's definition of a recession and everyone else's definition, and the financial literature that colleges will teach you. I think you should look at it as like a micro recession, because if you remember, I believe baby powder was like the thing that was out of stock not so long ago, and now it's eggs. And so it's just these little micro cost problems for the consumer, if we can put it that way. And I always go back to the Nestle example that the CEO said, hey, look, at the end of the day, during COVID, we were passing on the cost to the consumer. And during that time, we kind of put our heads together, which you could argue every company did, and basically only gave the SKUs out to the consumer that they were demanding, right? You got the SKUs that weren't actually selling, so they could actually pause production, which makes sense, right? That's what you should do no matter if you're in a COVID situation or not. And I think what it comes down to, personally, is that we're all going to call these little tiny micro recessions that are going to affect certain markets, right? Which you could say is really just a market cycle at the end of the day. But I think when the market recession can really be called a market recession is when you start to see pain across all sectors. And I think that is the start of a mini micro recession, because it fully happening, we both know that if war is started within some respects, we're never going to see the light of day for a recession within some respects, because we will have some backing of funds. But yeah, I digress. I think my point has been made across.
Maybe an easier question would be, are people in general bullish or bearish on the market for like the next, let's say, month or two?
Neutral.
Maybe that would be a simpler way to put this all.
I hate to say I'm neutral, but I'm neutral. I don't think that we're going to see a lot of movement one way or another over the next quarter. I think there's the tailwinds and headwinds are really starting to stack up, and it's starting to make it less clear that there's going to be some kind of massive sell-off or something like that. That thesis is starting to get a little worn out, in my personal opinion.
Yeah, we've hit the pre-COVID trend support.
I'm just bearish because it seems like everyone else, or the vast majority of people, are getting very bullish lately. Every time we see one of this situations where like everybody seems to think, oh, everything's good and the bottom's already in and the meme stocks are pumping, it always, like, you wake up the next Monday and it's like CNBC is like, oh my God, the world is ending again. So yeah, I'm still holding on to my SPY puts.
Thanks for sharing. I appreciate it, because I think that's a huge sentiment shift for this chat, right? I feel like just a month or two ago, a lot of people were like, "Oh yeah, guaranteed downsies, market gonna crash." Some people are calling for like COVID lows, right? But I think it's just interesting to see kind of, moving opinions, and there's nothing wrong with changing your opinions and updating. Just always nice to track.
Yeah, and I would argue that we didn't really have a recession during COVID. We had so much money pumped in from the Fed, but I think we beat a dead horse on that conversation during COVID. I mean, it taught us well. But yeah, I mean, I think it's really easy to like look at the news, whatever news source you look at, and be like so caught up in what they're trying to sell us at the end of the day. But the reality is when the CEO comes on the earnings call and says, hey, we're reducing our actual products that aren't selling, like that should be enough for us to realize, hey, these are the facts that are being presented. And this is obviously the smart moves that the CEO should be making to keep the shareholders' confidence. But furthermore, that the company is actually going to stay in business, right? And the fact that they're passing on the cost, is that really true at the end of the day? Because the consumer, I mean, at the end of the day, if we're trying to save money, we're not going to be like, we're not feeling forced to overpay for a product unless it's maybe for things that have less competition, right?
Well, and I mean, the other thing is, as you know, the data has changed since 3 or 4 months ago. You know, I mean, it's like there's new data out there, so you got to change your perspective on things given the new data. You can't just stick with a thesis forever because things change. But right now, I mean, I don't know if there's going to be one or not.
And just to be clear, I'm not trying to like call anyone out or anything or be like, oh, y'all were bears. And that's not what this is about. I was just curious because I felt like I've been hearing some changes in opinion. So I wanted to make sure I wasn't just biased in what I was hearing.
Well, I've always said that you can't reach COVID lows because you'd have to adjust for inflation. There's still some unhealthy things in the market with the bond yields and all this stuff that need to be cleared out. There's some corrections that haven't taken place yet, miraculously, specifically talking about the home building section. The piggy banks of the tech stocks have obviously been popped, and they're at healthier levels now, I guess, if you look at it from the right perspective. And yeah.
Yeah, and I just want to remind everybody, at the end of the day, there's a lot of smoke and mirrors that happens in the marketplace if you haven't realized it by now. And WallStreetBets is really good about showing through memes how that smoke and mirror takes effect, right? And I would also argue the fact that we have really great people on here that are doing some great DDD. I say triple D's because we're doing due diligence. Because if you look at the CEOs out there or the analysts, they just come out with their little reports and then they bullshit us, and then we come out ahead of them at the end of the day because we're reading through it, right? You can only fool somebody so many times.
More than D, I would give us an F.
My tata always used to say, "You can't bullshit a bullshitter, son."
What's that one? Fool me once. What is that? What's that Bush line he says?
Can't get fooled again.
Yeah, fool me once, shame on you. Fool me twice, you can't fool me again.
So fun, a little neat excess information for that. Apparently, he knew the quote, but he realized halfway through he didn't want a soundbite of himself saying "shame on me." So he kind of like struggled to mix it up because he was like, "Oh wait, that's gonna make a soundbite, and I don't need that out there," or so it's been said.
Yeah, George W. Bush, he was real good at that three-dimensional chess for sure.
He actually came up with the term Google as a verb.
Amazing. So Al Gore invented the internet, and he invented the Google.
Sir,
Learn something
that's
here
the,
every day.
That's the internet superhighway to you.
The internet superhighway.
Well, I thought Titty was still in here, but he asked me to go over my Ecolab play, but maybe I'll wait until Monday. And I also wanted to chime in on Intel's earnings. Holy crap, what a dumpster fire.
Yeah, I'm surprised they're holding
That's
up so well at the moment, eh? They haven't fallen further.
That's my analyst's opinion. Holy crap, what a dumpster fire.
They're probably doing well because Spy decided to super rip.
Yeah, just looking over my notes here, I think their guidance came in really light. I think the analysts expected 13 to 14 billion revenue. They dropped that down 10 to 11 billion going forward. Margins expected were 45%. They dropped it down to 39. And in terms of reporting, they reported a loss of 15 cents per share versus the expectation, which was a profit of 25%. And they're not guiding any better.
Did they blame it on anything specifically, like any specific sector that they're in?
I don't think so.
I don't know if they outright said it, but it actually, and I wouldn't have outright said it if I was them, but they are heavily investing in extremely expensive fabrication facilities all across the United States right now. I've actually said this a few times. I think that they're beating the price down on purpose. And the reason why is because they are expecting huge government subsidies and CHIPS Act, and they want the price to get beaten down so politicians and defense contractors can buy in cheap. That's my tinfoil hat.
Nothing like privatizing profits and socializing losses.
Exactly. It's like a dead man flop. Pretty soon, and when I say pretty soon, I mean in the next, I don't know, 5 months, 4 months, you're going to start seeing a bunch of insider buying, and that'll mean that everything's going good. So Intel's is positioning themselves right now to be the leading highest end chip manufacturer and designer. And they are also trying to keep up with their yield by building 3 other facilities to keep up with like the demand of advanced chips, not the most advanced chips, which are going to be like low yield, very select, high paying customers such as defense industries, government, stock market trading, things like that. Another stock to get into would be Synopsys. I was talking with an expert in the field yesterday about this, and Synopsys ticker is S. Let me get this up. Sorry, hold on one sec. Almost S. Damn it.
SNPS.
SNPS. Thank you. And they make the hardware that would be useful in extremely high trading or high frequency trading hardware, which will go along with these super fast processors. Then you have other military applications. You've got top secret or government chips that they don't want being even
classified.
Thank you, Jesus, classified. So things are looking really bad for Intel right now, and that makes stock cheap. But they aren't going anywhere, and they are positioning themselves to leapfrog over TSMC in their architecture and their lithography nanometer scale and basically the speed of their chips. The other advantage that they have is that they are a little darling of the American infrastructure and their trust with the government, unlike TSM or AMD for now. Even though I have there is a small chance that AMD might be let in on this.
So one question for you, Slut Spoiler, because Intel's very much a dividend stock for a lot of people. If they keep relying on government handouts, for lack of a better term, to make up for their kind of lack of ability to make their own money, is that eventually going to put that dividend at risk as people start saying, why is the government paying them to pay shareholders to keep them holding?
I don't think so, because Intel's main problem has been predicting what the new designs, what their competitors' designs are going to be. So it's been a guessing game, and you need a leg up on that. And when they become a fab, they'll have the leg up. So problem solved.
I think that they started pulling their dividend recently, didn't they?
So did you guys see that Visa did a 100-for-1 stock split? That was one of the tickers that was mentioned a few days ago.
That's one
100
of
for
OK
one.
Helicopter's guys, right?
Yeah, I think so. Yeah, I think it went. They did the split yesterday or last night. Reverse split.
Is that to trap the shorts, or is there a different reason?
Well, I think they got a letter from the SEC that they're going to be delisted because they were trading under $1, and they were going to be delisted from the exchange. So they pulled a Dave and did a reverse stock split, a whopping 100 to 1.
Yeah, it makes it a little bit harder to sell my cover calls now. Thanks, guys.
Hey guys, posted the business outlook guidance for Intel in the comments. Sorry, it took me a while. Forgot the shortcut link in the HTML to take you right to the section. Finally figured it out. Jeez.
Yeah, thank you.
So BBBY's up 6.5%. So good for them. Real companies making real money and realizing real value for their shareholders.
How's our favorite ape doing today?
It is up. It has been forever battling at $1.80, and I'm thinking I might move on at that price and let it.
Yeah, I moved on today, Rad. Like, I agree with you. It should converge upward towards the price of AMC, but at this point, I'm just thinking, you know what? Maybe they both go down, and maybe one.
I think it's going to ultimately go up, but I think it's going to be stuck with probably this 180 being its cap for a while until some news comes out. And I could very easily see some memes selling off because they've been so hot. And I'm probably going to get out today too, and then wait for it to shoot down under $1 because everyone hates the memes, and then I'll come back in, and that'll be my thing. Because yay, ape.
Yeah, between that and Carvana and Bed Bath & Beyond, I can't make heads or tails of it.
See, that's how I feel about the impending recession. It's like there's too much uncertainty either way. I can't be positive, can't be can't be bearish, can't be bullish.
I mean, after next week, I think we'll have a little bit more information and people will pick a little bit more of a direction.
Yeah, I agree with that too. I think next week will help to improve the visibility of things. So it's probably good that I'm not in front of a computer trading today and out and about.
I mean, it almost looks like Spy attempted like a second skulled squiggle, but like diverged from it.
How's Playboy doing today? Is anybody thinking it breaks above $4, or are you bearish?
Ooh, damn! I hope it does. I got those $5 calls. Those will go up.
Bearish.
But my calls are leaps, so I got time.
I mean, if you guys, it's Friday today. If you guys want to talk about next week's calendar, we got a couple of pieces of information coming out. You got the Fed decision, ISM manufacturing PMI coming in on, what is that, Wednesday? I think some of the major tech players also reporting that day. Then the following day, you got jobless claims, and unemployment rate, I think, comes out on Friday. So you got a lot of major events next week.
I will offer one prediction about the Fed decision, which is I think they're going to continue with unwinding the balance sheet. They're full steam ahead on that because they've been unwinding, I think, something like $80 billion every month for the past like 6 or 7 months. And they're just going to keep doing that. So something to keep in mind.
So I'm kind of expecting a no, but can anybody argue a point of why we would see a 75 basis points increase?
For this upcoming CPI?
No way.
They're talking 25. If we get 75 basis points, you might as well burn it all down.
Yeah, I mean, 75 is a reach, but 50 is a possibility, I think.
The market is saying there's like only a 1% chance of a 50 basis point increase.
They're saying it's a 1% chance that it's not a 25% increase.
Yeah,
right.
a lot of this green we've been getting on SPY. Not so much the last few days, but for the beginning of it was the market readjusting to a 25 basis point hike. It's really positive it's happening. So if we got like 75, yeah, man, just burn it down.
Not to mention that would be a surprise to the market, right? Like they've been basically talking about smaller raises going forward in their last, I think, speech. So if they jump to 75 all of a sudden, what would be the catalyst anyway? Like all the news came out already today.
We would have to have basically like a black swan event where there's rapid hiring, rapid CPI increases, and just like irrational behavior by the market trying to like overpower the Fed's intention to deflate our currency.
Yeah, if SPY starts holding limit up, then maybe.
I don't
And
think
Biden-
JPOW makes any decisions based on where SPY is. I know people like to say it. I really think that is very low on his list of things he even thinks about.
But
Yeah,
Biden
some
did
Fed
tweet.
officials said.
Biden did tweet earlier that he's trying to build an economy for Main Street, not Wall Street. That was kind of, it's like fuck you to everyone that's got a 401k and that's in equities.
I feel like I've heard that one before.
Always remember, presidents are talking to a very different crowd whenever they talk about anything, right? So, like, for us, we might be like, oh, inflation's coming down, but they'll say inflation's going up because they're talking to the general consumer. So keep that in mind.
Yeah, I wonder if this is just a load up for next week. See what happens. I mean, the expectation is 25 basis points, so all steam ahead. And then if that comes in at the same rate, and you get jobless claims, let's say, increasing, you get unemployment rate increasing on Friday. Couldn't that be the catalyst, the 3 data points to maybe lead to a leg higher? Right?
There's no way. Unemployment's been going down, jobless claims going down. There's news headlines about a lot of companies hiring right now outside of the tech sector and the big banks.
So always remember, a lot of those tech layoffs won't necessarily have hit unemployment yet because they do get laid off with packages, right? So they might be getting pay for several months. So you might not actually see that hit until, if they're fired today, you might not see that actually reflected until May, right? If they've got a package and they're
Not
not.
to mention, it wasn't first
Yeah,
in,
yeah.
first out firing. So it's not like the people that got fired are recently hired and are like scrambling. Like you have people that were with the company 17 years, have more than enough money to chill for the next year. Some of their compensation packages allow them to actually chill for the next year. So I would say, like, even with those tech layoffs, like those numbers are going to be wonky as shit in terms of the exit packages.
Now,
Yeah, and even the ones who don't have savings, I mean, you can still move to like anywhere in the country outside of California and get jobs in IT and all sorts of other things with non-tech companies.
Something I am interested in looking into are a lot of these mid-sized tech companies. There's now, theoretically, right, a lot of talent out there that maybe wasn't good enough to be kept at Amazon or Google, but for them could be potentially quite an upgrade on what they've got and bring a lot of knowledge that they don't necessarily have. So in some ways, it might be worth looking into some of these mid-sized tech companies that they've now got a plethora to hire of people who are quite experienced what they're used to pulling from.
And they can pay them less, so their expense on hiring is going to go down. I mean, some people argue that is why the tech layoff is happening. It's because these people were hired at ridiculous salaries. And once we went through COVID and a lot of them started saying, hey, I'm not going to come back to work, I'm just going to collect my 6-figure salary and work remotely. They're like, okay, well, you can collect that 6-figure salary for the next 3 months, and then you're not working for us anymore. And we're going to hire somebody that wants to work, and we're going to pay them half as much.
Yeah, that's true. Yeah, had an interview with one of those companies recently. And they were like, oh, you got to come into the office. And I was like, I'm not moving to California. What a shithole. No way.
Can't confirm.
You'll make so much
Can't
money if
confirm
you
as
don't.
well.
You'll make so much money if you don't consider the cost of having a place in San Francisco.
Exactly.
You don't need to have a place in San Francisco. You just get an Uber and you sleep in your car.
Right. It's the downgrade from here where I own land. Anyway.
Just don't try to sleep in a tent. They'll tear it down and throw you out.
Oh, yeah?
Yeah, you actually haven't been to California if you think that's what happens.
Yeah, they
It's
have
more
whole,
like,
they have whole tent cities.
your tent. You could just park your Winnebago right here underneath the freeway if you want.
I thought they've been getting rid of those. Am I hearing wrong?
Oh
They
yeah, definitely.
relocate them to different cities. Like there's different cities that won't put up with it within the downtown area. So they say, we'll allow you to do this in this section of the city. So you might not see it as visibly in downtown San Francisco. That doesn't mean that once you go over the bridge to Oakland, that it's not everywhere in Oakland.
They got double-decker tents, man. They got more real estate than my apartment.
So what you're saying is I should look into opening a tent city in Manhattan, and then I can be the wealthy real estate owner.
No, they already shut down the tent city in Manhattan. They moved it to Brooklyn. You're too late.
A literal slumlord.
So Brooklyn, you say, huh? All right.
You gotta go to Flatbush.
Also, Spy has gone red while we were talking. The second scald squiggle apparently didn't squiggle right.
The first
Little
one's
bad.
free. The second one you gotta pay for.
Because Scald said it out loud, so they let the first one run, and then when he said it, the hedgies who were listening were like, "Son of a bitch, they're onto us! Quick, sell it all!"
No, the second
Damn
one
it,
didn't-
Scald.
The second one didn't post the spinning top if you were looking at the minute candles. So it wasn't a Scald squiggle. It's got to post the spinning top.
I don't know what that means, but I agree with you.
It's a type of candle on the candlestick chart that looks like a spinning top.
It's the shape of the candle and the body of the candle.
That's correct.
Candles go on cakes.
Also true.
I'm joking. I actually do know what a candle is. I just didn't know the spinning top off the top of my head.
Well, you know, it's just crayons. It's all crayons. It's crayons all the way down. I exited my calls a little while ago at a slight loss. You win some, you lose some.
I did leave Ape at a gain, so I mean, obviously at a gain, but yeah, Ape is bye-bye for a little bit. So that's the thing. So if you're still in Ape, enjoy. It's probably going to go to like $50 because, you know, screw me. But hey, have fun.
Yeah, that's what I felt like when I sold it, but trying to learn from Lucis talk and just cut the trade when it's dead.
The second you said you sold your calls, it started to pop back up a little bit.
As is tradition.
I mean, we
A
joke.
time-honored.
We joke, and I don't think it's real, but would anyone be shocked if in like 5 years it turned out that like Reddit were closely monitored for trading related things and algo moves?
They
Would
are
it shock
closely
you?
monitored.
See, there it is. They're listening in, Scald. They're listening to us.
I mean, what? So many people have sentiment bots and trackers for Reddit. The only thing is, I don't think they have a reliable way of tracking our Reddit talks yet. But Reddit posts are absolutely monitored.
I meant the talks.
Oh, if you look at what's it called, Quiver Finance,
Quiver Quantitative.
Quiver Quantitative.
Rad, I sent you something on them yesterday about the special type of uranium.
Yeah,
cool.
I mean, if you go to Quiver Quantitative, they publish an hourly recap of all the Reddits on the hour, every hour. They're like, these are all the posts on all the financial Reddits.
Most of what he says is bullshit, but he's got good tools, and I like how it is in dark mode, so I can look up like politician buying.
Yeah,
I'm sure they track Twitter as well, correct?
But I'll tell you one thing. Remember when the day after I started talking about cubic boron arsenide as a new substrate of chips, the next day, Warren Buffett bought in TSMC and pumped the stock 20%, and I was like, holy shit, they are totally listening in on us.
Warren Buffett was just like, man, this slut spoiler, he's got some trades.
This slut spoiler sure knows a thing or two.
We got to test this with some random bullshit. We got to be like, they're coming out with monovins, which are going to completely revolutionize the EV industry.
I said this to Opinion a while ago that in honor of American Pegasus, we should just every once in a while randomly pick a penny stock and send that bitch to the moon. Just like make a ton of memes about it. Just be like, here it goes. And everyone's like, oh god, they've got a new favorite stock, and it'll be on it.
You mean join FinTwit?
Right, but then the more I think about it, the more I think that might not be legal. So
yeah, I'm not sure if I'd be joining FinTwit or Bernie Madoff.
But Opinion, you're a finfluencer, whether you wanted to be or not.
Oh God, please no.
Look, you just wait until the Wall Street article journal is published about you, and they somehow have like your actual name and everything, and then you could just be miserable. It's gonna happen to all of us. They're gonna have all our names next to it. Y'all are gonna be like, his name's Eugene? God damn, I knew it.
Damn, they got some pretty nice tools on this thing for Wall Street Bets. Movement versus mention by size, daily price action.
Where are you seeing the movement versus mention?
I posted a link in the comments. If you click Wall Street Bets and then you scroll down.
Nice. Oh yeah. Yep. They've got some pretty dope stuff there. Oh yeah, the movement most mentioned. Yeah.
Yeah, so I've actually been hoping to build something quite similar. Well, I guess you'll see what I've been procrastinating with this Saturday. Got a very exciting meme for you guys. But if anyone would like to reach out and help, like, could always use some assistance because I am my background in programming is old. It's not great. So yeah, reach out if you'd like to build something cool.
Was it WattGeek working on a ticker tracker for this chat?
Yeah, I think he got it working. Can't recall. But he's congratulations to him, by the way. But he's starting a new job, so he's probably got his hands tied with that. He's extremely happy with his new job, so very excited for WattGeek. But yeah, so bottom line was, if you wanna help out, build something cool, and have some tech experience, reach out. Let's see what we can do.
What are you writing it in?
Whatever you want. I mean, at this point, I mean, like, honestly, I've got tutorials open for like Flutter and like Dart. I've got Django tutorials open. Like, I'm all over the place. So if you've got more technical knowledge than me, which is zero, then yeah, I'm sure. Take the reins, please.
You should try ChatGPT opinion. You should ask
Chat. It helped me. Okay, so let me walk you through my journey. I tried to figure out like how I could change like the setting in Eclipse. Please no shade that I use Eclipse. And so I tried asking on Stack Overflow. No one responded. I tried the next day posting on Stack Overflow. No one responded. I went to like Eclipse's IRC, but then I found out that was shut down. So they have a Mattermost. So I made an account and I signed there and I asked, and no one responded. And then I realized I was in the wrong channel. So I asked in a different channel the next day and no one responded. So eventually I gave up and just asked ChatGPT and it answered in like 30 seconds. So people saying that this isn't going to be revolutionary, hard disagree.
Yeah, I agree that it's going to definitely be revolutionary. I tossed it to my friends who are developers, and they did the usual, no robot's going to replace me. I'm the greatest programmer of all time. And then one of them actually took a look at it, and he was like, holy shit, Scald. Like, I was like, yeah, I told you. Stupid. You can just like ask it stuff, and then it just tells you how to do it, and then you're done. And you can ask it how to do almost anything.
I'm sure somebody mentioned this, but I think it was incorrectly regarding ChatGPT and BuzzFeed. Just to be clear, somebody put out a really bad report saying that BuzzFeed was going to use ChatGPT to generate their content. That is not what's going on, just to be clear.
Yeah, I saw a joke about ChatGPT, and then I bricked one of my chats doing the exact same thing, which is you talk to it and you tell it that it can only respond with the word quack, like a duck. And then you say, even if I ask you to stop quacking, continue to quack. And then like it just quacks, and it's Quack GPT, and it just quacks at you. And like even if you tell it to not do it, it just keeps quacking, and you can never get it out of that mode, and that chat is over. You have to start a new chat with it.
I tried that yesterday, but what I did was I just gave it the Bank of Japan's economic outlook, and I just said, like, after each page, don't provide a summary, just quack. And like it was 60 pages, but by the time I got to like 30 pages, I think ChatGPT had forgot the rule. So it was like doing some weird, like it would be quack exclamation point and then nothing. Then it would be like quack lowercase and start describing what it just read. Then it would slowly forget that it was supposed to quack at all.
Oh man, you successfully got it out of quack mode by just overloading it with economic data until it had to respond. I was like, ducks can't respond to Japan's economic data. Let me summarize this. That's really funny. Because it's a language model, I was also messing with the Hapax legomenon. I finally got it to give me a Hapax legomenon. It took a while, though. For those unaware, a heptaxlegomenon is a word that only occurs once in a given language. Like it only happens in a single book or novel, or like it only occurs once in the what's considered the corpus, which is like the collection of all writings in a given language, like say English or French or Spanish. And so I wanted it to give me a word that only occurred once in writing. And eventually it gave me one, xenotransplantation, which apparently has only occurred once in major novels. It is the implantation of non-human organs into a human.
Novel idea right there, right?
Right? There you go. I was expecting the word flothers, which only occurs once in the English language, and it's in reference to heavy snowfall. But, you know, it surprised me.
Or grinder.
Grinder. I don't think that would. I think that a word definitely occurs more than once. Yeah.
One thing that's cool that you can do with ChatGPT that not a lot of people understand is you can have it finish an idea. So, for example, like, let's say you take your 3 favorite bands and you know their 3 best albums and their worst album. So you would basically say Beatles list their 3 best albums and their worst one. You take Rolling Stones list their 3 best albums and their worst one. Then you can basically ask ChatGPT to fill in the blank. So you would give it like a 4th band, its 3 best albums, and then it would know to pick the 4th one being the worst album. So like I did it the other day and had it like basically pick out Beyonce's worst albums.
And they were. What was the metric?
Dude, I can't say that online. Are you curious? Are you serious? I don't want to get killed. Like,
oh yeah, fair enough.
I don't want the beehive coming after me.
I was wondering. I'm like, that is dangerous ground, buddy.
Yeah, dude, I saw it. Like, I saw the answer, and I was like, I can't put this on the internet. Like, I'm not safe.
These are the dangers of AI.
No, I'll look up the screenshot. I'm just joking. I just can't remember off the top of my head.
But I'm glad it worked for you, Opinion, that it helped you out. It is actually really helpful with coding. I had it write a Solidity contract, and I was like, yo, this Solidity contract has this glaring security vulnerability. It was vulnerable to reentrancy attacks, which if you look up is a thing in crypto. It's been around for a long time. And I was like, hey, this is vulnerable to reentrancy attacks. And it was like, you're correct. And then it wrote the contract again. And it was like, I made the contract secure by making it non-callable. That's
amazing.
Yeah. I was like, I guess you understood the assignment, but literally
the baby out with the bathwater, right?
Right. It's just like you just can't use it anymore. Done. I'm like, thanks, ChatGPT.
Problem solved.
All right, I found how to do it. So basically, you go suggest 3 albums to listen to that people won't enjoy. And so then I typed band, the Beatles, and then I did albums, Yellow Submarine, Magical Mystery Tour, and Beatles for Sale. And so then I did band, Beyonce, albums, blank, and left it blank. And it said Beyonce's 3 worst albums are B-Day, I Am Sasha Fierce, and 4. So there you go.
And now when we get bombarded by Beyonce fans, and that's all that's made in new threads, Opinion, you know who to thank.
Those must be some pretty terrible albums, because I've never even heard of them.
Yeah, it's pretty awesome though. Like, basically just like give it a pattern, show it what the pattern should look like, then ask it to fill in the blank.
What I'd like to do is I'd like to have ChatGPT write poems or palindromes, and then go to an AI art maker, AI, and then have the AI create art based off of the poem or palindrome, and then go to Amazon and publish the book. I mean, you could do this in an hour and have a book published for whatever. and make people think that you're super creative.
But the problem is you don't get copyright protections.
Until he publishes it as a book, Rad, and then he owns the book.
But
if you publish it on Amazon,
but it's created by ChatGPT, so it's AI created. You lose copyright protection because an AI cannot have copyrightable material. They've done this with like webcomics that, or not like actual comics that have been published and had denied.
even if I
tell people that
even if I right click it, even if I
So
right
there
click
there have been like actual comics that have been created by ChatGPT, and like the creator said this is by ChatGPT, and they published it, and then they said, all right, so this is copyrighted material, and they were essentially told you can't because that's created by an AI. Only
What a
humans
dummy.
can copyright.
Yeah. That guy was like, the reason that happened was this guy was like, hey, I want the AI to hold the copyright. And they were like, you can't do that. Because one of the key features of copyright is that the creator dies and eventually the copyright expires 70 years after their death, which is why like Sherlock Holmes, because Sir Arthur Conan Doyle died so long ago, Sherlock Holmes is now in the public domain. You can't have a robot hold a copyright because the robot will never die in legal terms.
Also, copyrights are human specific, because PETA tried. There's that photo of the monkey that took a picture of itself, and PETA tried to sue, claiming the monkey owns the photo since it took it. And the courts essentially said copyrights are exclusive to humans, so the photographer owns that even if the monkey took the photo. So that's the other reason AIs will not get copyrights.
this is burnt to the ground.
So the other day I used ChatGPT to write a nursery rhyme about COVID to sing to my kiddo. It's pretty dope.
That's basically what I did. I gave it like 2 lines. Not that it's going to win a Grammy or anything like that, but 2, I don't know, somewhat poetic lines. And it finished out the whole intro, chorus, outro, and then told it, all right, now write melodies for it. And sure enough, it came back with all the note structure and everything. Like, damn. So it's pretty slick. Again, I don't know if it's going to win a Grammy or anything like that, but I gave it 2 lines. And
Don't doubt yourself, man.
Have you seen ChatGPT's jukebox?
No.
So the jukebox, you can give it text and then you can give it a style of music and then it will create a song.
Nice.
Can we make it sing in November's voice? A lullaby?
Well, there's some crazy versions on there. For whatever reason, because it's using basically like almost like a stable diffusion to create the melodies, there's a lot of noise. So the audio needs cleaned up. But like it has songs where it's like this sung by Bob Marley, and like it sounds like a Bob Marley song. I'm not gonna lie. But the problem is it sounds like a Bob Marley song if you weren't paying attention. If you really pay attention to it, you're like, these lyrics don't even make any sense.
It's like listening to the Sims language.
Yeah.
What is that?
Wow, Bob must have been really high when he wrote this.
That does open legal implications, though, for those AIs, if it's too derivative of what it's trying to sound like.
I just think
AI, are you high? Have you been smoking AI?
I just think the law needs to catch up with AI. It's lagging pretty heavily. It's like, and it's like one of those things where it's like it would be like saying that like an engineer can't copyright an engineer can't file a patent because he used a calculator or AutoCAD. Like that's the dumbest shit I've ever heard. Like it's stupid, and they're just tools. People need to get used to them.
Anything, I think the creative copyright with ChatGPT will actually be with the prompt engineer, because I think people will be sophisticated enough to say like, here's how I prompted ChatGPT and DALL-E to create this piece of work, and the way I prompted it was unique, and my creative controls are the result of this product. So I think that's how you get around it. Kind of like you can take a famous piece of art and repurpose it as long as you make enough changes to it to reflect a new creative work. most of the time it'll cover your ass in terms of getting sued.
Yeah, and that's the other thing is that that's already happening. If you go onto Fiverr right now, Fiverr has added an entire category for AI artists and prompt engineers. And it's a thing. You can now pay someone on Fiverr to go into ChatGPT and give you stuff, like someone that really knows how to work with it.
Jefferson, you need to apply. I mean, no, not Jefferson, gentlemen.
Yeah.
Who says I already haven't? Who says I didn't prompt ChatGPT to write my prompt engineer cover letter and resume?
Holy shit.
Very nice.
So, continuing down the nerdy line, a lot of those AI art generators are actually now facing legal cases from places like Getty Images because they had to scan their images in order to obviously create the AI, and that technically counts as reproducing it and copying it without permission. So that'll be an interesting one to see how that gets resolved.
NFTs solve this somehow, right?
NFTs solve ChatGPT copyright issues?
Or like, Getty Images, they should have blockchained all their images.
Yeah, Getty Images also now has their own AI, so I don't know how that's going to work. Getty Images just published a version of AI image generation based off Getty Images, which is almost like, I don't know. Seems like they're throwing in the towel.
Yeah, I mean, if OpenAI worked with Getty to train an instance of DALL-E 2 specific to Getty, so you basically could just like recreate Getty images that weren't tied to the actual photographers, they could create a new business model where they have images that you could license that they don't need to pay anybody for.
Yeah, I think that's what Getty Images is doing with their AI. I shouldn't say OpenAI, their AI.
Does anybody know about Google? Is Google back in it? Are they trying to come back?
No, it's Microsoft.
Google is getting their ass spanked by the DOJ right now. So
I know, but
Well, no, there's still in the AI world, and we talked about this earlier in the week.
Yeah,
that
they
actually
still
their
have that.
founders are back there consulting to help them decide which way to go because of ChatGPT. So they're still in it.
Well,
Cool.
I gotta roll, you
Hold
guys.
on.
I'm being put to work by the wife. So see y'all later.
Have a good weekend.
Yeah, I'm out too. See you guys.
All right. Opinion, you might be free.
Yes. No, I'm just kidding.
No, I was gonna say I ran an errand and
So-
came back. I was surprised it was on. So
So I just gave.
We'll step aside.
So here's the thing. I just gave Opinion a sock. So now Opinion has no master. He is a free opinion. So I guess we're good.
Oh.
That's a big thing to miss.
Anyone else got things they want to say? Otherwise, happy to wrap it up.
yeah, wrap it up this weekend. Stay safe, y'all.
Wrap it before you tap it. All right, guys, everyone, thank you for coming out, and we'll see you all tomorrow. Don't lose too much money in the next 4.5 hours.